Hello everybody and welcome. I'm Ken Calhoun. How many times have you ever traded a gap but not been really certain about what the specific entry trigger should be, or been uncertain about how to trade a gap for either a swing or a day trade? Those are my favorite chart patterns. Let's take a look at 3 advanced strategies for how to trade them coming up next. Hi traders, let's take a look at 3 advanced gap trading strategies that you can start using immediately. The first one is to give preference to gaps that are already part of an existing uptrend. So sometimes you'll see a stock that's been in a downtrend and then it gaps up. That's not nearly as good as a stock that's been in a pre-existing, preferably multi-day uptrend before the day of the gap. And this is simply because institutional volume is coming into those stocks where you've got a uptrend that then gets so excited from the buyers, they gap it up and then it continues up. So that's tip number 1. If you see a sideways trading stock that gaps or a downtrending stock that then gaps, those are not nearly as good as a stock that's been in a pre-existing uptrend. Either the day before or 2 or 3 days prior is even better for a pre-existing trend before getting into a gap on a continuation play. Our second tip is to look for gaps that have a small bullish cup as part of the gap in the pre-market. And what I mean by that is what you look for in your pre-market charts or even in market is looking for a small bullish cup, preferably of small size, say a half point, 3/4 of a point of a cup pattern. A cup pattern simply looks like the letter U, and the larger the cup, the worse it is. It's always better to trade cups that are very small in size, because that means the left side of the sell pressure that made the left side of the cup doesn't have much to overcome before buyers come back into it and skyrocket it on up to new highs. So when you do look for gaps, give preference to those that have small cups as the earlier sign before you get in above the high of the cup at either the day or the time of the morning that you're looking to enter that gap continuation trade. And for our tip number 3, give preference to those gaps that as part of a cup pattern have a large green candle at the right side of the cup, as opposed to a sequence or a series of small green candles. And the reason for this is because institutional or professional traders are buying it up very quickly if you can see a large green candle, either for a day or a swing trade gap continuation. So a large green candle before you get in on a gap continuation is a good technical confirmation. And for tip 3.5, a bonus tip, give preference to those gap charts that have increasing volume on the right side of the cup as it takes out new highs before you get into the trade. And just for fun, let's do a name that tune quick activity. Listen to the following passage as I play it on tenor sax for you. It's a classic song, that's your hint. In the topic of runaway gaps, see if you can name this song. Classic rock forever. Until next time.
Great job, Ken. You were amazing. Hi traders, we hope you liked this Trade Mastery video with Ken. Go ahead and subscribe to Ken's YouTube channel and post your comment or question in the area below. Thanks for watching and good trading!